Hey guys, Jeff Marples, broker, GPK Luxury Real Estate up here in Nob Hill, San Francisco. I wanted to talk to you about the trends in the real estate market here in San Francisco. Now, let's just think about it. San Francisco, yes, we are in a bubble. We've talked about this for, 15 years. The reality is this, follow the trends, guys. I personally look at different financial indicators to sort of track where the market is going. I also read a lot. I'm very interested in macroeconomics, international economics, and I listen to the financial news. And really what I have to say is I wanted to share where I believe we are going in the marketplace. Now, remember third quarter, fourth quarter of last year. In my opinion, there was a lot of anxiety in the marketplace, and I felt it myself. My clients felt it. They were really worried about it. And remember what was going on last year. Fed was increasing their rate fund, right? Their interest rates. And at a certain point, that affects the purchasing power for individuals, especially people getting a loan, right? Because the higher the interest rate goes, the less purchasing power you have. And there was also a very bullish narrative coming out of the Fed, right? And they tempered down the economy by raising those interest rates. And what has happened? Okay, well, December was disaster. Remember, the Dow was just tumbling. Everybody thought we were coming over the edge. Every single pundit out there was talking about a recession. Even real estate agents were talking to me about a recession. How are we going to do a recession right off the bat? People were anticipating that we're at 2008 again and we're going to fall down. Realistically, guys, don't listen to that garbage, right? Follow the trends, right? And so there are key indicators in the marketplace: notice of defaults, foreclosures, building starts, interest rates. Where are those trends going from a micro to a macro level when you're looking at the bigger picture within the economy? And I'll tell you, third quarter, fourth quarter, a lot of anxiety. Nobody showed up to the fall selling market, right? Everybody's like, oh, I'm just going to wait until real estate prices come down. Okay. Well, remember, guys, no seller is going to raise their hand and go, buy my property for $150,000 less than I have it because I overpriced it, right? It is up to you guys to buy right. Now, I follow a real estate economist named Robert Campbell. He's outside of La Jolla. He writes a newsletter that I subscribe to every 2 months, bi-monthly. And I got it just the other day. And I wanted to share a couple things with you. So median sales price year over year, up 3.2%, right? Home sales year over year change, down 12%. So values creeped up a little bit. And remember when 3% was good, right? But sales, the actual sales, the number of transactions is down, right? Inventory is up, 2.7 months, right? So it used to be 2 months. Now it's like 2.7 on average, right? That is going to definitely change if you are down in South Beach selling a condo versus a single family home in Coal Valley. Big difference, big switch there, guys. But that inventory is up. The number of homes on the market or the longer is 22%, right? So there was higher inventory. Notice of defaults, 23 in San Francisco. What other? Notice of defaults was down 5%. So it's nothing. And then there was one other thing, and then we'll get to a couple graphs on my computer. So overall, guys, market momentum reading in September was 6.4. Market momentum reading in December was 6. That's an uptrend, guys. That means the market is going up, not down, right? The only down market that I see in California right now is San Diego. Investors, if you're looking for it, follow Robert Campbell. He's got a book called Timing of the Real Estate Market. It is a great, great read. I'm going to share my screen with you real quick and show you some of the trends that are in the marketplace. Now, this is from my own statistics website. You can see it up top. I'm going to be linking it to my new website. But look at the market momentum. Single-family homes. Market momentum is up. That means activity and people wanting to get into the marketplace is up, right? But also you look at the inventory and the sales. So the sales transactions are down. Look at this other trend here. Look at the number of units. Look at the fourth quarter here, second and third quarter. This is where I started to really think back in June, July, we're changing our marketplace. And look at the steep downtrend from there. That is the total number of sales within the marketplace. It is down, but it still says that values are up. So it really just says to me that people that want to buy, they're still making moves. People that are not or on the fence, they're not, they're just sort of watching and waiting. Here are the statistics for condos. Condo momentum is up, sales are down. And here's a very similar graphic for the single family homes to the condos. So number of transactions have been down. Let's look at housing starts, right? Housing starts from Socket Site just today. Housing starts is a key indicator. Remember, San Francisco, you have developers that are putting hundreds of millions of dollars into new construction. So one thing, I think that the developers are probably pretty smart. They hire pretty smart analysts to dictate, you know, is this going to be a good investment or not? So look at the trends, guys. You have a number of units in the last 2-3 years that are going up, but it's not falling off at all. You're just kind of slowing down a little bit on numbers being built, you know, or permits allocated, right? So remember, especially in South Beach, what's coming up on the market? We've got buildings like the Harrison, which is still selling. We've got Mira. We've got Avery. We've still got units at 181 Fremont, and that's just in South Beach alone, plus all the BMR units around there, plus all the construction in different lots throughout the city, right? So I think that, you know, there's still very, very strong numbers when it comes to housing starts within the city. Another indicator I was looking at, CoreLogic, and we're talking about, you know, here's the IPO data. You know, what are we really looking at in an IPO? And basically, remember Facebook went IPO back in 2008, 2010. I'm sorry if I can't remember. But the values of real estate at the time, we were at the bottom. So, you know, you can't really gauge an IPO to say that the values are going to go skyrocketing because, well, when Facebook went IPO, the values were really, really low, right? So we've come up a huge level, but you also have all of these tech IPOs, including Levi Strauss, going to go public this year. What's it going to do for real estate values? Well, you know, that demographic, you know, there are a lot of millennials, to be frank with you. I don't know if millennials are really purchasing real estate just yet. I've read articles that say they're not, you know, but also there's going to be what they say 10,000 new millionaires. That's got to affect property values in some capacity. So I don't think it's going to jump up like some magical wand of value, you know, but I wouldn't be surprised if values started to go up. But remember, an IPO, those owners that get the IPO shares, there's a lock-in period, guys, of 6 months. So that 6 months after the IPO, these guys are just holding tight. They're not going to make any purchases unless they have other values and other assets elsewhere, because you know what? They cannot do anything until that 6-month lockup period, and that's where they take out equity, and then that's where they use the equity for the down payment, and their private banker is going to give them some ridiculous rate for the interest on a home mortgage, right? And so that's what I'm expecting. I'm expecting that, yeah, it's going to affect values, but I don't think it's going to be jumping some ridiculous amount. You know, I think that the market is still dictating that, you know, we have interest rates that are going to be in check. We have a lot of new millionaires. That's great. But at the same time, it's not going to be escalating 20%. We're not at the lows that we were when Facebook IPO'd. That's just bottom line, right? Another thing that I caught my interest today is the 10-year Treasury yield. You know, look, the Fed had to raise rates, right, in December. That was a lot of the anxiety that I think was in third, fourth quarter, you know, because, you know, they thought, oh, he's just going to keep on raising. And realistically, he had to, you know, Chairman Powell had to raise the rates in December. But what's the narrative coming out of the Fed ever since? From Powell as well as other Fed chairs, it's very dovish, guys. I was actually down at Merrill Lynch yesterday or 2 days ago, and I was talking to a financial advisor, and he was saying that his analysts, you know, there's not going to, there might be one interest rate hike, but it is all the way down at the end of the year. And he actually said that it might even come 2020. So you know what that is creating? Is creating an environment of stability, guys. That is a big, big draw. And the other part of this whole thing is what is going to happen with the trade deal. I read another report today. I think that that trade deal is going to happen in about a month. That's what I read. And you know what? There needs to be something. If there's no trade deal, I'm having a hard time believing that there's not going to be a trade deal. It could happen. It might not. But if there's a trade deal that is struck, it is going to be beneficial for both countries, and it's just going to layer on another layer of stability, right? So that is sort of the way I'm looking at it. I'm looking at this year as being fairly stable. And when you look at, I look at CNBC and you look at interest rate hikes and you sort of watch these advisors that are talking about it, a lot of people are just sort of saying that, we're just going to be holding tight. There's other people that are contradictory to that. But I always, I have my own opinions, and that's sort of the way I look at it. Housing starts in the city. We're looking at great housing starts, new construction. So that is very good indicator. And then I also was looking at CoreLogic. Now this data is a little bit older. This is from last year, from 2017 to 2018. But look, home sales in September from one year to the other, it just reaffirms sales are down, but prices are up. Median sales price from 17 to 2018 jumped 13%, right? Once again, that's a little older data. This is an annual data point, but it's one of these things that I'm looking at. But CoreLogic has really good indicators, right? They're doing the numbers, and I think that's, you got to follow the trends, right? So what it comes back down to, guys, what I want to say to you, let me get off my share screen if I can. Maybe not. What I want to say to you guys is, look, nobody is going to tell you that it's going to be a great deal. If you're buying a property in the city, really, you're going to have to make sure that you're not buying it for the shorter term. I want you to buy it for the long term. And so you are absolutely, sure that you're making a good decision. That's a nice thing about some of the buildings that are down in the new construction, because if it's a down market and your life changes, you need to move. Well, the nice thing is you can rent it out. That's a safeguard for you in any of the new construction. Remember, investors or people that are buying, buy close to jobs and transportation if you can, right? And that's really going to say downtown, South Beach area, Mission Bay, and the safeguard is if your life changes, you have to move. And if it's a down market, you can always rent it out. That's not the case for old Victorians, right? There's going to be eviction control that's going to control that. But just buy smart, Sometimes there's still bidding wars out there for single family homes especially, but look at units that have been on the market for a little bit of time, see what you can do. Try to edge a little bit down on those values. Because really at the end of the day, you're going to make your money when you buy this thing, not necessarily when you sell it. So you want to make smart decisions, guys. I hope this information has been really helpful for you. To be frank with you, this is like my 30th take on this. You should see my outtakes. I need to create a video just for my outtakes because, it's pretty bad. Anyway, I hope the information was really helpful for you. If you want me to send you some information, the new market trends, share some of the thoughts from Robert Campbell, I can't really send you the report, but, I could share some of the content with you, just, talking about it. But please, ping off of me. I'm happy to help you. I'm absolutely thrilled to be up here in our new office. The people who are surrounding the office of the help and the other agents, it's absolutely fantastic. We're doing some great things. And so, follow the trends, guys. That's my final message to you is follow the trends. And if you want some support in any of things regarding real estate, just let me know. I'll be happy to talk to you about it. It's what I do, and I really get a joy out of it. So thank you much for watching, and take care. Finally.